It's not over. Why dramatic stock market moves could continue into next week. In today's cover story, the controversy behind the trade agreement with the Eurozone. Plus, how Americans are missing out on millions due to their work ethic. And in Traders Unplugged, the guys tally up how much the 1% lost when the stock market went south. First Business starts now.
You're watching First Business. Financial news, analysis, and today's investment ideas.
Good morning, I'm Angela Miles. It's Friday, October 24th. In today's first look, industrial strength stocks. Robust profits from Caterpillar and 3M power the Dow Jones Industrial Average to its biggest gain in 2 weeks. However, reports of a healthcare worker being tested for Ebola at a New York hospital turned the rally around. Still, the Dow logged in a solid 217-point gain. The Nasdaq rose 70 and the S&P 24. In after-hours action that could seep into today's session, Amazon plunged on earnings after reporting a steep loss. Amazon also gave a disappointing forecast for the critical holiday season. Microsoft shares rallied $1.50 by topping estimates. Pandora shares slid $1.50 even though the music streaming site increased revenue and advertising. Also, Microsoft co-founder Paul Allen commits $100 million to fight Ebola. Trader Dan Stessich of Athena Advisor Services is with us this morning on this Friday. And Dan, it looks like the market is getting down to the real deal and not just these market-moving headlines. What do you see happening out there?
Well, that's absolutely the case. A few weeks ago, we had all these bad things coming out. The Chicken Littles were coming out and saying Europe's going to be bad, cold weather's going to Ebola, you name it, it was out there. And back then, my advice, and it still is today, pay attention to the fundamentals. We were at the start of the earnings season, and to be realistic, they've all been pretty good, better than expected. There was worries about guidance because of what was going on in Europe, and guidance has been better. These are good numbers right now, as well as our fundamental economic numbers that have been coming out are pretty good. We have a lot to go, and it doesn't mean we can't pull back, but this market should look at fundamentals. That's what I look at, and it's pretty solid in that regard.
Next week, GDP comes rolling in. What do you think about that number? Will it be strong?
Well, you know, my sense is that it's going to be above the 3% level. People are expecting it to be there. And all numbers leading up to this have been pretty good. No reason to lead me to believe that it should be downgraded. I certainly hope it's above 3%. If it's below, I'll get a little concerned because here's a fundamental reason as to why the market might want to fall back. So let's pay attention to what comes out.
Ford will be in focus today with the earnings after GM's announcement yesterday. What do you suspect these numbers will look like?
Well, full disclosure, I do own Ford, but I like Ford. I've been getting killed on it. A couple weeks ago, Ford came out and said some of their European problems were a little more severe than they thought, and the market or the stock got battered. However, with the earnings coming out, I think they're going to be a little better than expected. And even if they're not, I kind of believe the bad news has been baked in. So you can jump onto this stock either before or after the announcement. I don't think you're going to get a big move to the upside right away, so I'd wait it out. There's a lot of upside potential on it, but see what they say. If it backs off a little bit, buy it at better levels.
Thank you very much. Thanks.
You're welcome.
Chuck Coppola has details on how the Obama administration could potentially cripple ISIL by shutting down secret supplies of oil. Chuck.
Good morning, Angie. In the wake of the devastating shooting in Canada, the Obama administration is stepping up efforts to cut off revenue streams for terrorist organization ISIL. The attack is raising security questions close to home. Now the U.S. is targeting ISIL's finances by trying to block the organization's access to sales of smuggled oil. According to the U.S. government, ISIL raises $1 million a day by selling stolen oil. The British newspaper The Telegraph is reporting that the U.S. is also considering airstrikes against oil pipelines in Syria.
Traders will be watching for news Sunday on the health and the wealth of European banks. The European Central Bank will be revealing results of stress tests of 130 banks in the Eurozone. A media report claims 11 banks failed the financial health check. There are concerns about banks in Austria, Italy, Belgium, Cyprus, Portugal, and Greece, but there's no confirmation from the ECB.
In today's cover story, what could become the biggest trade pact of all time is critics and supporters on both sides of the Atlantic accusing each other of misrepresentation. Their focus is an agreement still in negotiations called the Transatlantic Trade and Investment Partnership. Supporters say the Transatlantic Trade and Investment Partnership, often shortened to TTIP, seeks to conform regulatory differences between Europe and the U.S. and reducing or cutting tariffs. It would expand American agribusiness to sell genetically modified crops and hormone-fed beef to European consumers. Conversely, European airlines could fly routes across American skies currently restricted to U.S. carriers. It could hurt U.S. airlines and perhaps cost jobs, but consumers might reap the benefits of more competition. How do you relax or change or get these two regulatory systems to agree?
We don't relax. TTIP is not a deregulation agenda. And we won't change basic laws on both sides. But there are a number of things we can do, both going forward for new rules, making sure regulators talk to each other.
This week, TTIP supporters told a gathering in Chicago that the trade pact would add 30,000 jobs in Illinois and increase exports from the state by a third. But in published accounts, critics elsewhere have said TTIP is less about eliminating regulatory differences and more about relaxing them. Lori Wallach, director of Global Trade Watch, says the planned deal will transfer power from elected governments and civil society to private corporations. The aim of this deal is to secure and expand the privileges of companies and investors. The U.S. Chamber of Commerce, which supports TTIP, disagrees.
Regulators on both sides of the Atlantic should be held to certain same standards in terms of how they go about regulating.
The U.S. Chamber admits European critics have seized media attention on TTIP. Opponents fear corporate losses will inspire lawsuits against governmental policy. The U.S. Chamber disputes that too. Negotiations for the Transatlantic Trade and Investment Partnership resume in Brussels later this year. Supporters expect an agreement near the end of next year.
The investigation into potentially deadly airbags is snowballing. Federal prosecutors are investigating whether Takata misled regulators about its defective airbags. 2 U.S. senators are calling for action from the National Highway Traffic Safety Administration. They want the agency to issue a nationwide recall for cars equipped with potentially defective Takata airbags. NHTSA has left it up to automakers to issue recalls. Drivers in high humidity areas are targeted. But Kelsey Mays of Cars.com says the recall effort should stretch nationwide because of one key factor.
A lot of cars travel all the time and end up in the hands of different owners. So down the road, a car that wasn't recalled because it's in the Northeast could end up down in Florida where there's a greater risk of high humidity that could interact with a faulty airbag inflator.
A full list of the models affected can be found at safercar.gov.
The housing market is in recovery mode, but still treading water. About 15% of U.S. housing, or just over 8 million properties, have a mortgage for which the homeowner owes at least 25% more than the estimated market value of the property. That's according to research firm RealtyTrack. It's down from 17% in the second quarter of 2014, and the mortgage blues hit pricier homes more than others.
The IRS is increasing the amount of money Americans can sock away for retirement. The old 401k contribution limit was $17,500. The new limit, $18,000. And for people who are 50 or older, the so-called catch-up contribution rises to $24,000. The best part, that money is not taxed by the government. IRA annual limits remain the same.
Apple's new iPads are on the market. The iPad Air 2 and iPad Mini 3 are in some, but not all stores. Rollout has been a bit hush-hush. Apple tablet sales have struggled, while iPhone sales have soared. Apple shares closed at a record high of $104.83.
More green is being flashed in front of Chiquita Brands. A team of Brazil-based investors are offering to pay $14.50 per share to take over the banana brand. Chiquita shares rose 8% on the sweetened offer. Chiquita shareholders are set to vote soon on a banana bid from Ireland-based Fife.
In our earnings watch, Caterpillar beat expectations and increased its profit outlook for the year. Shares rose nearly 5% to $99. Athletic gear maker Under Armour beat the street, but not enough to keep its stock afloat. Shares dipped 2.5% to $64.34. Dunkin' Brands beat analysts' expectations by 2 cents, but shares fell 6% to $44. And newcomer Grubhub more than tripled its profits in the third quarter as more customers ordered food online. Shares finished up at $37.19.
On to more earnings from the transportation sector. General Motors reported a $1.4 billion profit in the third quarter, with strength from North America and China. New truck and SUV sales were especially strong. Cadillac, however, was a point of weakness. GM shares rallied on the news but ended the session down 38 cents. United Airlines posted a record third quarter profit of $924 million. Investors gave United a 36-cent lift. American also topped analyst earnings estimates on the declining cost of fuel. Shares soared $1.44.
Strong airline earnings come as a wave of airfare price hikes set in, and it's not slowing down travelers.
We are seeing a bit of a lull during the fall, but bookings for winter travel have already picked up quite nicely, which has allowed these airlines to kick prices up. I mean, we're looking at averages of $4 to $5 each way.
TravelZoo's Gabe Saglier says so far Ebola headlines are not halting travel plans. And as is tradition, Time magazine reports the most expensive flights fall on the Wednesday before Thanksgiving and the following Sunday. In some cases, passengers will pay double the norm for airfare.
Americans are work martyrs. According to a report by the Labor Department and Oxford Economics, Americans give up more than $50 billion per year by not taking all of their paid vacation. From 1976 to 2000, employees forfeited more than 170 million vacation days. Last year, the average American took off 16 days.
When it comes to taking an unexpected day off, employees have some pretty wild excuses. In CareerBuilder's annual survey of the most ridiculous reasons for skipping work, employees offered the following excuses: uniforms catching on fire, accidentally getting on a plane, and even needing plastic surgery tweaks. This year, 28% of employees reported calling in for a sick day when they were actually quite healthy.
And oh, the irony. Starting in 2015, Reynolds American, which makes Camel cigarettes, will no longer allow its employees to smoke with free abandon in the office. E-cigarettes and smokeless tobacco will be allowed, and an indoor smoking area will be built. On the economic calendar for today, it's new home sales for September, and on the earnings docket, Procter & Gamble, Ford, Wyndham Worldwide, UPS, and Colgate-Palmolive. Still to come, one trader says next week's Fed action could set the tone for the rest of the year. Plus, the biggest losers, what battered stock is a buy now, and why credit card companies are rushing to get new technology out the door.
Even though it may seem as though just about every major retailer has been hit by hackers, in reality, among a list of the top 10 largest retailers ranked by revenue and compiled by Bloomberg News, only 2 have been hit. Target with 40 million debit and credit cards that may have been affected, and Home Depot with 56 million cards compromised. Walmart, CVS, Costco, Kroger, Amazon, Walgreens, Lowe's, and Best Buy, so far as we know, are breach-free.
The massive security breach at Home Depot appears to be the tipping point. Banks and credit card companies are now scrambling to get new debit and credit cards in the hands of consumers. The new cards contain a security chip. Matt Scholes of creditcards.com is Skyping with us this morning. Good morning. And why is chip and PIN technology so much better than the traditional swipe?
Well, good morning. Chip and PIN solves 2 problems. One, the chip makes our physical credit card harder to counterfeit, and that's a big deal. And also, having the PIN number there makes it more secure because it's a lot easier to forge someone's signature than it is to know their PIN.
Banks and credit card companies seem anxious to get these chip-enabled cards in the hands of more people by the holidays, but will the retailers be ready?
They're getting there. I've been to a lot of stores like Walmart and Target and places like that have the terminals that are there, but most of the time they're not ready to be used for whatever reason. So a chip card without a terminal to use it in is not worth as much. So that's an important step for them to take.
Now, President Obama is already moving forward with federal workers, for instance, in some places within the government. But why is the U.S. behind Europe and Asia in this new technology? How did that happen?
It's really a money issue. Coming out of the Great Recession, retailers weren't terribly interested in spending a ton of money to buy these new credit card terminals, especially since the banks weren't putting out many of these chip cards. But now, after the Target breach and some other big issues, there's a lot more money being put in and a lot more a lot more importance being put on these movements.
At the end of the day, it does cost credit card companies money, so I can see their end of it. Thank you so much, Matt Schultz of creditcards.com.
Thank you.
Coming up, could Microsoft's gains balance out Amazon's losses in today's session? And after the break, bear traps and billionaire losses are on tap in Traders Unplugged. Get your game face on. It's time for Traders Unplugged. Alan Nuckman and Scott Cellady are ready to face off this morning. Good morning, guys. And round number one, buyback. 95% of company profits are spent on stock buybacks and payouts. What does that say about the stock market?
Well, that is somewhat of a concern, but what's more important to me are profits and earnings. It's all about earnings, and the market's able to focus on earnings.
That's
market's
shocking.
able to focus
Profits
on
and
earnings.
Wow. What else is there to be concerned
The
about?
PE ratio now is 18, which is not a high level, not a low level. And of the stocks that have reported so far, 70% have beat on earnings and 50% have beat on revenue. So those are all positive signs fundamentally.
It's bad for the market because I'm not going to say that the CEOs know what's best to do with that money, but instead of giving it back to the shareholders or enhancing shareholder value, they should be doing more research and development or mergers and acquisitions and looking for better ways to make the economy better, not just make their numbers look better. It's bad for the market.
That's what I would have said. Invest the money, and that's disturbing that they're not investing in their companies.
That's what I would have said.
We agree.
Round number two, lucky losers. The 1%ers lost a collective $26 billion in last week's super sell-off. Of the biggest losers in the stock market, which ones are now a buy?
Oh, aren't you excited? The 1% lost money, Alan.
I'm not excited, but
wallow in that. That's awesome.
It demonstrates that they had money to lose.
Oh,
that's what that demonstrates. Of those people, of those big losses, we've seen Buffett lose with Coca-Cola and IBM. You saw Microsoft. You saw Gates lose $1 billion. You saw some big losses. What companies? The Waltons lost $6 billion. What of those losers could be winners in the long term?
Why does it always got to be? Could be winners in the long term. Why don't you say, hey, maybe we take a breather here? The market's been crazy as of last week. Let's see what happens and where the chips fall.
Moving on to round number three, 10-10 win. Raising the minimum wage to $10.10 saves the government $7 billion as low-income workers are moved off of government poverty programs. But who loses?
I think the minimum wage going up helps everybody.
Of course you would. Of course you
But
would.
what are the arguments against?
How about this?
What are the arguments against?
No, I think everybody out there would agree with me. The reason why we're talking about minimum wage or legalizing pot or online gambling is because the economy stinks. Let's say the economy's doing well. All three of those are a non-issue. We're raising the minimum wage because the government can't get the economy off the ground.
Here's your bonus round question. As bulls and bears tug at the stock market, a real bear issue is on the ballot in Maine. Voters are being asked what? That it should be legal to trap bears using A, jelly donuts, B, deer meat, or C, traders.
No, not the deer meat, because then you're making two people angry.
So jelly donuts.
Yeah, it's got to be the jelly donuts.
The answer is jelly donuts. Good job. Thank you so much for being on the show today. First Business continues right after this. Deming of Equity Armor Investments joins us now with his take on what to expect in the Friday trade. Hello, Dan.
Hello, Angie.
Earnings came out after the close from Microsoft and Amazon. Amazon fell apart last night. Will that have much of an influence on the market today?
I mean, it's possible, Angela. I think, right now we're seeing a market that's come off the lows and really pushing up now towards some resistance areas on the high side. But like you said, with yesterday with Amazon coming out and being down, Microsoft actually came out positive. So it just depends on how all these earnings are going to be interpreted, what the expectations are in the marketplace overall. But right now, as far as the market's concerned, we've seen a significant bounce. We're still seeing large moves, realized moves in the market. So, that we see, volatility still hanging in there, even though this market has been able able to come back from the 10% down move. Now we've gained about 5.5% back.
There have been some wild swings, but Dan, you are always a man with a plan. So what's your strategy for today?
Today we're looking at basically the end of the week. We got next week we got several items coming out, keying off of that Fed announcement in the middle of the week. So we feel right now with the volatility space, with the VIX down around the 16 level and the VIX futures trading around the 17 level, that it's actually a possible time here to kind of rebalance us and put us back into some volatility that we sold when we saw the VIX up in the mid-20s. So we're kind of rebalancing here, looking for the possibility of a little bit of a pullback, and the fact that the market is still continuing to realize large moves on a day-to-day basis. You know, we feel that that's going to keep the volatility space elevated.
So you feel like there's a pullback coming, but what happens after that? Will it be a short-term pullback, do you think?
Now we're closing in on the midterm elections. So you got the Fed announcement next week and then the midterm elections early November. So that might set the tone for the rest of the year. I think, you know, ultimately when we've seen these large moves in October, typically we've seen the market actually rally into the end of the year. 21 out of 26 times, I think, when we've seen the market down in October, it's actually closed the year higher. So you take that into account, we could see a push higher after we get through all these items over the next couple of weeks.
Thank you, Dan.
Thanks, Angela. Go green.
Well, that wraps up our week. Coming up on Monday, why more Americans will be running for health care coverage as companies decide to cut the strings on health benefits for part-time and full-time workers. What you need to know on our next show. From all of us at First Business, have a fantastic Friday.